All right, guys, time for a little trade recap. We're going to go over some of the trades that we took in this morning. I'll find them up here. Netted us 1,587.38 on the day. So we're looking at the 1 minute chart on SPY. And we always look at SPY even to trade the futures, just a better representation. So let's bring up our NinjaTrader chart here. This is going to show you where inevitably those trades were taken. So nice little P&L there, 1587.38 today. All three of the trade round trips are right here on the screen. So trade one, exit, trade two, exit, trade three, exit are what we're going to be covering here. 3 for 3 on the green. So as we always use TOS for charting. Where'd my mouse go? There we go. We'll break that down here for you guys. So I just wanted to show you where the start points and the longs were. So the opening morning bell, let's take a peek here. So let's look at our oscillation indicators and what we were taking a peek at. Now, a lot of the time when I use a pre-market high-low system, like always, we usually get a tag of one of the opposing. If we're starting in the center, we're either going to go up tag or down tag. We're going to tag the pre-market. And that's usually a standard elites trading lesson that we try to adhere to no matter what. So when the market opened today, we have an older CPI. This is the Fibonacci extension from the CPI to the downside, 423.6. Now, that was a very big level. And as it came and set a pre-market high up here, that light blue level, it came down, set a low right on that fib green, and then had support. Now, we opened up, we usually like to use halves here, and we did open up halfway on the top side channel of the pre-market, right, high and low. So we opened up at the fib and pushed, right? And something that you might have noticed right here, and on my first trade, I started adding in and buying into here, 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 looking for the first pre-market high tag of the move. And we usually, again, like I said, magnet to either the high or the low. So we started getting in there, and it went a little bit red on the loop, and that's fine, but we left a little gap in price action between the pre-market high and obviously price action. So hit the standard deviation +1 on the 1 minute chart, came back down, and that's fine. It just came back down towards the 4400 loop. So let's take a look at our key indicators here. We knew that we had a good chance of going up if we were above the 423, right? That's 437.28 on SPY, and that's exactly what happened here. So oscillation, a lot of overcool right here, a lot of TTM cool, and then we had the nice little MAC and TTM structure this higher low kind of like right here coming into like 820 or so, a little bit before the gate opened, and we had the MAC cross there 15 minutes prior, and the RSI kind of showing us that we were going to push back up. Not only that, we're holding the fib and the halfway point. So we did buy here and looped and sold here. That was our first trade. It's about $780 some green. And usually whenever you hit a first pre-market tag or high or low, doesn't matter what pre-market high or low it is. It doesn't matter if it's high or low, rather. We hit high, and that's when I swapped short. So after the long move was long here, 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 waited to push it back up. Average was right around here and pushed up for that 800. We shorted here and then broke all the way back down, took profit on that first initial leg down that I let one ES contract kind of ride. So my first short was 44.0575, 44.0550 was 1 and 2. And then I purchased back at 44.0250 and 43.98. So we had some nice movement right to here. And then we said, yeah, it's probably going to continue the wash and wash pretty hard now because we're getting a lot of difference in oscillation. So let's take a look at the short now. Compared to that long, we have divergence. We have price action higher, RSI lower, right? Same with the MAC, which is our other favorite, lower. So we have lower highs setting up in oscillation indicators. So we know that price action divergence is going to come down, and the pre-market high is usually my price level of choice. So we went short here, came back down. Initially, we broke into that bottom 50 channel. I said, I'll wait till it gets cool, right? Oversold. So wait till that whole move to the downside on oversold and close the shorts. Now, after that hit way down here at 38, yeah, 43.85, 43.85, 75, and 50. And those came in right here. And this was my last long play. And again, just opposite of the oscillation. Shorted the lower high, longed here at the first one. So 1 and 2 are done. Coming into trade 3, this is another overcooled crossing MAC, and we're coming into good support. So you see a cooled RSI, and I was just looking for a scalp back up. I wasn't looking for anything major. Usually when you start getting bearish crosses and we start getting under that 200 SMA, 1 minute for trend, we're going to stay to that downside. Initially, our 436.20s area needed to be tagged before there was any real support. Here's 46.20, and that did come into effect, a little bit of a low, but then obviously tracked back higher as we expected. So that last trade right here is only a like $325 scalp right here, 2 ESs from here, and I got about 3 points plus on that, and that was that last trade you see. So that's my 3 for 3 green recap for the 1585 today. So let's talk about where the market's going to go and predictions coming into this. Now, as far as the predictions go, we had short again, biased here, and let's go start the weekly real fast here on SPY, because we had mentioned this in a prior video here that the RSI and oscillations got hot. We started to see this boil up here, and when the RSI gets hot, you have a very high probable chance to pull back, even if it's just near term. Obviously, we're not talking about anything of the fake fabricated force-up market of quantitative easing up there. We're talking about a regular market like this. So when we did see that first initial crackdown in the weekly, we were definitely short bias coming into that. Let's take a peek at the daily, because there's a couple different entries we called in the last few months for these short tops, and that is again RSI bias. So last time we did it, we were right here. You can check our prior videos, and 3 lower highs right here on the last, and a gap and go to the downside did keep us watching those fills to the lower, right? And I did post in chat, we're going to look for the futures gap. Next SPY gap isn't until very far under the 100 EMA for the next bounce. Now, I'm still predicting that this is a very bullish scenario here. This is just that really beautiful relax. And we got a shy this morning. And a shy is something that price action does not meet a demand of indicator. So we did not hit the 100 EMA, as you see there in the green on the daily chart. We actually shied that away. So if you look at yesterday's action, that's when we got a little close, last trade day rather, not yesterday, and definitely. But you see that hard green bar, that's the 100 EMA on the daily representation. We have special codes that put that into the intraday chart for us. And then we started on the uptrend. Now, that's fine. Now we just have that no tag 100 EMA and picking back up. And I can tell you why that's fine, because our ES targets kind of take precedent right now in what we're seeing and what we've been seeing, because the golden Fibonacci, which we've been talking about for quite some time here, is the very special one that we have. And anything under the 2360 gold will go to 3820. It'll pop back up. It'll go halfway to the other fib that we had just used, 236. It'll loss. And then I said, if we do lose 3820, we will be magneting right to the 50. We will go down by that gap. We'll get very close to 4350s, is what we said. And well, lo and behold, top of the gap tag on futures, 4350 to the penny. Then she started to turn around. Now, for this Fibonacci, the 50 is extremely strong. Now, we still have this big old gap that's going to be unfilled for now. And nothing goes in a straight line, right? And we're coming into the 3030, which has thus swapped to the downside, even though we were coming into extensions of -2 on the standard deviation. So again, when -2 is hit, the bias of long is exponential. So here's the -2, that's that red line right here. It's swapped. Remember, it used to be all uptrend, and we were looking at a -2 green. Now we're looking at a -2 red, because the deviation is pointing to the downside, but it is still a -2, and it is still support. So don't think that. So as we came into massive support, you see MAC oscillation divergence, higher low RSI divergence, and TTM. We had a triple threat on a buy zone here into those lows. So what did we say? We said sell puts or go long anywhere into that 4350, 4330, the gap zone, right? Because we had just a beautiful downside monstrous move for weeks now, and we need a relief. We need to cut back up a little bit, right? It's just been down for too long. And now coming into this week's catalyst, we have 2 different things: Jackson Hole and NVIDIA earnings on Wednesday. So what I'm thinking here, and this is the prediction on what I usually use as the elite systems here for magnets and targets, is when we get a shy like that, we're going to get a little bit of a retrace to instill some pre-gap fill bounce. So let me take apart these fibs, make this a little cleaner here for you guys. I'm not going to use anything else but the golden fibs that we've been using, like so. So that 50 tag here and the 100 EMA tag there on futures, I think it missed a little bit. That's massive support on the top of the gap there, right? It just barely tapped to the top of that futures gap. And futures gaps are extremely rare. They usually happen in contract shifts or just very rare experiences. And they usually fill very, very quickly. So when we're getting close to oversold, you can see a little oscillation kick back there in the last 2 days. This is not like a reverse rally to all-time highs yet. I think we're just going to get that pop because nothing goes in a straight line, and we've had just really couple easy weeks of short. So what do we look for, right? So it shies the 100 EMA, and this is what it usually does. We're going to look for the confirmational lower high. So from here, for the rest of August, maybe the next couple weeks, we'll see what Jackson Hole and NVIDIA brings. We don't know. We're in the dark on that, but this support is going to be a zone where it's going to pop back up near the 50. And my guess is going to be somewhere near the 2360 and old 2618 fib teal. So somewhere in between 4510 to 4477 range, kind of a big range up there. So we have an opportunity to bounce from here for a few days back up, maybe even through to that 50 SMA area, and then potentially maybe even just trickle a little bit more, depending on the feuds, and come back down for into September's volatility into the futures gap. I don't think we're going to go any higher, and I still think I'm very bullish on this right now. It's still in a very good uptrend. It's just testing a low point RSI, looking for a reset. So I think we're going to be still looking for upside potential, but right now we just had nothing goes in a straight line. So we had a bounce. We're going to look for the up, look for the lower high that we're going to hit for that target of the gap fill, and potentially 61.8. Now between the 61.8 golden fib, which is 34 or 4304, and then the 50, which is 4357.77, this pocket right here is going to be a dangerous level of support, and that's where the earliest pickup for long is going to be, in my opinion, for the next cycle up to go potentially attack all-time highs if it wants to rally into the end of the year. Now, remember, these things lag 6, 8, 12 months advanced as far as like yield inversion, and the sky is falling people here on YouTube, and how everybody just assumes everything is fire and Michael Burry short and all these things that just don't really matter yet, just taking place because we don't have confirmation of a lot of these things. And not to mention we do have a SPY gap above us as well. So if you didn't see the gap and go, or didn't hear us mention it before, that is still something that we still need to tag and could tag. It doesn't mean we have to turn back around here. So let's take a peek at the SPY one last time. Shine the 100 EMA, and again, relatively decent on oversold. We're getting close to that metric. So I think we're going to come down, shy the 100, come up, find resistance near 50 SMA area. I don't know, 450 at the worst here. Might get over it a little bit, but thus create that lower high, come back down for the 100 EMA actual tag, because it shied it. Remember, we don't have an actual tag right here of the 100. It's going to magnet back down. And that gap needs to fill on ES. So when this does this, and then we get the last couple weeks or so, we get maybe a day, 2, 3, 4 weeks, end of August. And then it starts September. Then we start getting the volatility of September. That's when we hit the lower low here. We go boom, 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 and then consolidation to further long after that, because I still think we still have a lot of lagging to do on a lot of these indicators here. If we go back to some of the oscillation indicators here and take a peek, we'll start at the weekly here. This thing is not really giving up top channel or anything like that. Yeah, we had a hot and we had a correct. So usually that comes back down to a 50 point. So we got the hot, here's the 50 point. So if that picks up again, we're going to go, but what is that going to create? The divergence, right? So this is long-term and months in here, maybe even 8 months from now. 6 to 8 is what I'm going to hope for. You're going to get that silent MAC cross. You're going to get the TTM to the backside. TTM's got to make a small wave. MAC's got to make a small wave. Price action does not have to make a lower high, right? And I'm talking macro now, not the micro. So if this price action supersedes, it loops to the 10, gets back over the 10 SMA, and the weekly pushes higher, we could attack near all-time highs, because price action up here does not have to reflect the oscillation indicators, right? So the indicators for the next few months could go down to the 50, then lower high on the RSI and DAI, TTM, same, lower high, MAC, same, lower high. So those oscillation indicators, as they're lower high and showing you the divergence, the price action can still be pressing higher. So I don't expect to go 500 plus, but near all-time highs, or maybe even to a push in all-time highs, might be that. And I think we're going to get just a bigger snap correct in the early times of 2024 leading into 2020 or 23 into 2024 end here. Who knows what's going to happen there, but there's going to be a kind of like a mass correct. And I think it's been setting up for some kind of war headline, some kind of mass shock headline. Who knows what conspiracy they're going to use to shake the market down. But once we start hitting that, we have people at JP Morgan and so on and so forth just saying, soft landing, good, no fears of recession, which you should 100% now be thinking fears of a recession and a hard landing when they're saying that, especially. So those are the only things I can think of for a technical analysis play out where we could see that this plays out in our regular elite system where we get a shy. So last but not least here, we'll just cover it real fast to get on SPY. Oscillation from here comes back up, struggles somewhere in the lower highs, right? It's going to look similar to this, even on the daily chart. We're gonna leave this gap open. At the very craziest scenario, we are going to shy the 100. We're going to blow all the way back up here to the no gap fill. That's the opportunity, right? And then lead down to the 100 EMA tag and ES gap that is not filled, okay? And that's what I'm thinking. So long bias from here above the 100 EMA, push it back up to minimum target 1, 50 SMA area, very close. Target 2, gap fill, no tag though. I think we're gonna leave it wide open for a little bit here. So end of August coming in, what do we got, 21st, one more week of rally, so maybe here and maybe here. But inevitably coming into September, volatility persists. We come back down to the 100 EMA, maybe even lower, who knows. But these lower highs on oscillation need to perform, okay? So nothing goes in a straight line, as we like to say. So as this develops, we hit fresh lows here on RSI, right? We're getting some deep TTM, and we need a histogram here to chill out one more time on the MAC cross. So let's hope for those. And then we're going to come back down and start attacking a lot of the gaps you see. Let's go back to the default here. We should have a bunch here. Lower on SPY. So we're still targeting 423, as I posted quite a long time ago. And that's sub 100, maybe even near that 200 EMA daily. I don't know. We're going to get there when we get there. But right now it's going to be that high volatility range of push, not volatility death. We're going to push here. High volume is the word I'm looking for. Come back up. We're going to hit a couple different targets above us, make that lower high scenario, drop September's volatility, and then potentially I still think we're going to climb back up a little bit as the lags. And then 2024 coming into there, we're going to get a massive drop, and I think it's still going to be a buying experience, but there's going to be a knee jerk that kind of shoots all the euphoric longs in the foot, so to speak. So watch for that analysis to play out. We'll give you some more updated day trades day by day that we take. And that will be that. So please tune in for the next one.